Hey guys, Akil Stokes here, and welcome back to another episode of the Trading Coach Podcast. Today, I'm going to answer 5 questions that you guys sent in, covering topics like designing trading strategies, integrating AI into your trading, Forex versus futures, business evaluation tactics, and knowing when to call it quits, at least on your strategy. Now, speaking of questions, Jason and I have a 2-day online trading workshop coming up at the end of June where we're going to answer a lot more of your trading questions, especially beginner ones. So make sure you register as soon as possible. I say this because you guys know we don't play around when we say that we will shut access down after we have a certain amount of registrants. And we're already at 200 or over 200, I would guess by now, after only going public a few days ago. So unless you want to miss out, don't dilly-dally, get signed up now. I'll throw a link in the show notes below that you can do so. All right, let's hop into our first question. Question 1, Akil, how long did it take for you to design your trading system? So before we talk about how long it took to design my trading system, I should probably explain what my trading system actually is. Now, it's taken me some time to figure out the best way to answer this question, but if I had to define my trading system, I would describe it as a rules-based, or I am a rules-based, discretionary, price action trader who has a major emphasis on structure, right? And if that sounds confusing, don't worry, I'll explain it. You see, I trade a handful of different strategies and concepts that kind of fit under a single umbrella. I trade advanced pattern formation, so your harmonic patterns, your Fibonacci-based patterns like Gartley's and Bats and ciphers. I trade pure price action trading like counter trend reversals at levels of structure, or trend continuation setups where I'm looking for extensions. I trade simple pattern formations like double tops and double bottoms, and even classic pattern formations like head and shoulders, flag patterns, all of that stuff, right? And again, that seems like a lot, but the important thing to remember is this. Outside of the harmonic patterns, which I look at as their own specific type of strategy because they exist in their own right with their own set of rules and their own different tactics for how to trade them, I don't trade anything else individually. So I'm not only trading head and shoulders. I'm not trading every double top or double bottom. Trust me, I've tried that before and it failed miserably. Rather, I use them within a bigger context of my overall analysis. Hence why I just like to call it price action trading, because all those concepts fall under the price action umbrella, and trading is me trading. And I know that may be confusing, especially if you're just listening to the audio version, you've never seen me trade. But if you want to see this kind of in practice, just check out the YouTube channel. There are literally thousands of videos where I break down the markets using these very same concepts. And for you guys that know me, I haven't really changed drastically over the years. I'm not one of those traders that bounces from one thing or another just to get likes or stay up with the trendy thing. I trade what works and actually makes me money because that's what's important to me. And aside from a few subtle changes, it's remained, at least the main concepts have remained the same for, decades now. Anyway, back to the original question, right? So how long did it take to design this system? And this probably isn't the answer that you want to hear, but it's the true answer. 19 years and counting. And yes, that's pretty much around the same time that I've been in trading. I'm old now, right? People that are trading now weren't born when I first started trading, and wow, never thought about it from that perspective. Anyway, the reason I say 19 years and counting is because the trader that I am today is built and developed and evolved from everything that I've ever done and learned and experienced ever since I first started trading, the good and the bad. And since I'm always continuing to learn, evolve, adapt, adjust, my system adjusts too. But to give you a more practical answer, to give the people what they want, I would say that it usually doesn't take too long to learn a system or a strategy, right? We can teach you one in a few minutes. But what does take long is figuring out which system or which strategy is the best fit for you. And trust me when I say success in trading just doesn't come from learning a strategy. If that was the case, we'd all be successful traders. It's from learning a strategy, practicing a strategy, developing a strategy, but also figuring out what strategy best meets your trading philosophy, your trading personality, and your overall lifestyle as well, right? You have to pick something that you can actually do. And with most traders not going full-time right away, you're fitting your trading around your current life. Now, if you want to add even more time to it, if you were someone who didn't necessarily want to just plug and play a strategy, but wanted to develop one completely from scratch on your own, that's a completely different story, right? That is going to take a long time because there are so many moving parts that have to be done in order to get it to work the way that you want to work it. But again, if you're a newer trader, my recommendation would be this, right? Pick a strategy that already exists and either trade it as is, assuming it fits your personality and philosophy on the market, or make tweaks, so small adjustments, so that it better fits your style and your personal goals. I know there's a lot of ego involved and we all want to do our own thing, but remember, the main goal of trading is to make money. So sometimes you got to put your ego aside and do what makes you the money. And once you're making the money, you have plenty of time to do strategy development while you're making the money, which will feed the ego, right? But feed your pockets before you feed your ego. All right, question number 2. Considering how advanced AI is, would you consider integrating AI analysis into trading useful? And for a fuller discussion on this topic, I do recommend going back and listening to Trading Coach Podcast episode 1296. It's titled AI in Trading, Powerful Tool or Dangerous Shortcut? But the short version is this. AI is both a gift and a curse in trading, right? And it all depends on how the trader, the person, decides they want to use it. If a trader is looking to use AI as simply a shortcut, like in more of a negative sense, meaning like it's a shortcut, but a shortcut in the terms of like a substitute for learning on their own or putting in the work, then they're probably heading towards some pretty negative consequences, right? I can't tell you how many times I've had traders reach out to me saying, Akil, AI told me this about some trading concept. Can you confirm that? And I'm like, yeah, that's completely false. But I'm glad you came to me for confirmation first before you went out and started blowing in the market doing this completely false thing. I've also had traders who have tried to use AI to determine whether a strategy works or not, right? Asking a simple question. Dear AI, or whatever prompt you want to do it. I'm very polite when I use AI. So dear AI, if you can pardon me a second of your time. But I've had traders pretty much reach out and says, hey, does this blah, blah, blah strategy, whatever they saw on YouTube actually work? And AI is like, yes or no. But that doesn't actually give them the answer, right? Trading doesn't actually work like that. It isn't that simple. So whether the answer is yes or no, it's honestly the wrong answer. Now, with that being said, AI can also absolutely be a very powerful support tool when used correctly. And notice how I said support tool. Because AI, and really many other things in trading, but for this topic, AI, it should help, it should support you after you've already learned concepts, after you've already put the work in. And because I like working in threes and your brain likes threes too, let's go over 3 ways that AI can support your trading. Number 1, market research. Now, my good friend and fellow co-founder of Tier 1 Trading, Mr. Jason Greystone, author of a really good book. It's here. You guys should all read it. This is a mandatory read. Hopefully you guys can see it. Always free. He uses a tool called Forecaster, right? I think the website is forecaster.biz. I'll put links below if you want to check it out as well. But it is basically an AI-powered tool specifically designed for the financial markets and specifically financial analysis and research. And one of the things that our traders typically use it for, and just to give you guys an example, is seasonality analysis, where you can quickly identify seasonal trends for certain markets or certain investments. So you can imagine going through this process yourself and trying to uncover that data would take an extremely long time. Think backtesting all over again. But Thanks to AI, you can plug in a few prompts and boom, it's there for you. And again, seasonality is just an example. You can do it for all types of other filters in the market. Number second way you can use AI, or AI could be helpful in your trading, is going to be coding, right? Summers are typically a slow time in the market, sell in May and go away. And a lot of our traders use this downtime for strategy development and continued education. And this year especially, I've noticed that a lot of the traders that, at least the ones that I'm working with, have been using AI to help them code indicators or tools that they plan on using for their strategies. For example, earlier this week, as I've been going on my own strategy development journey, we were in the live trading room and we were going through a session where I was building a strategy or kind of walking them through the process of doing it. And for this specific strategy, I had a lot of indicators that I was using / testing out for different filters, right? I had the SSL, I had the ADX, I had the DMI, I had the parabolic SAR, I had the RSI. Why are they all 3 letters? Very interesting. Wonder if there's anything to that. Anyway, focus, Akil. Needless to say, like my mind right now, my charts got pretty busy, right? There's a lot of moving things up and down for the C entry filter, no, exit filter, yes, this, that. And here's where coding can help, right? Instead of having a million billion things on my screen that I needed to look at, once I get down to the final rules of the strategy, I can simply have all of that coded into a single indicator, or maybe even better yet, a single arrow on my chart. I used to trade strategies like this as well, where there was literally a green arrow when I was supposed to buy, when all of the indicators did all the indicator things, and there was a red arrow that told me when to sell, when all of the indicators did all of the other indicator things. So you can imagine taking those 5 things that I mentioned and turning it into a single thing. I'm gonna have way more chart real estate. I'm gonna be able to operate more efficiently, and I'll probably get less confused and make less mistakes, which means keep more money, which is good in trading. That is the goal, as I mentioned earlier, maketh the money. Now in the past, right, traders either had to accept dealing with cluttered charts or they would pay someone to code these custom tools for them. And trust me, as someone who has dealt with coders, I understand why they do it, but it is extremely difficult dealing with coders because you have to be very specific, and there's just a lot of back and forth if you're not doing it in person, and it's annoying. Anyway, now you don't have to go with coders, right? You can use AI if you want, and you can do it yourself. Now, number 3 of the uses of AI, right? Evaluation. Now, let me be clear. I do not, N-O-T, think AI should tell you whether your strategy works or not. I also think AI should not be used for your backtesting, or should not replace backtesting. There actually is a time and a place for it, but for simplicity purposes, no AI for replacing backtesting, because there's just way too much other values that you initially need to do in backtesting or in the process itself. But once you've done the back testing, once you've gone through the journey and you have all the data, AI can absolutely help you evaluate it. Whether it's spotting performance trends, like identifying the best time of the day to trade, or the best days of the week to trade, or whether you're comparing different stop losses or different targets to find the best and most efficient combination, or anything you can think of, maximum favorable excursion, maximum adverse excursion, if you track them in your thing. This is where AI really shines, and this is where AI can become a very useful and supportive tool that can cut down a massive chunk of time in that form of analysis. But you got to do the work first. You got to get the data yourself. AI just helps you make sense of it. All right, question number 3. I heard a lot of Forex traders moved into futures for accessibility reasons. Do you agree with this? No. Next question. Just in general, this is a tough one because it's not really a yes or no question, but in general, traders switch markets all the time, and they switch for a lot of different reasons. In my opinion, it doesn't really have to do with one market being more accessible than the other. I guess it depends on where you live, but in most major countries, no. It doesn't even have to do with one being quote unquote easier than the other, right? It really just comes down to personal preference. And personal preference could be your trading philosophy, it could be your trading psychology. In some ways, it could be your trading strategy as well, as different markets move differently. And depending on the type of trader you are, your style of trading may be better suited for a very specific market. What you need to see, I'm thinking like volume and order blocks and stuff like that. You're only going to be able to get that in one market and not in the other. Maybe your lifestyle, working around your job, lends you to be better in this market because you can operate 24/7 or have a wider range of active trading than another market. So it is all personal preference. Now, as I'm mentioning this, I kind of want to go off on a rant on this topic as well. So I'm going to make sure to, once I find a notepad, to make note of it, and maybe we'll come back with a future Trading Coach podcast episode specifically designated to Forex versus futures trading. But for the purposes of this question, I think that kind of answers it for you. So question 4 and question 5, I'm going to blend together because they kind of go hand in hand. And just so I can save some time, what are we at? We're at, only 20 minutes. That's not bad. Usually don't jinx it. Don't jinx it, Akil. Anyway, the question is, how long did you stick to your system before deciding it was garbage, right? Trash. And how can you tell if it needs tweaks versus abandonment? And this is a very interesting question because I think there's a huge difference between how the average trader would approach this versus how the professional trader would approach this. You see, the average trader usually trades a strategy before properly testing it, right? I know that's a no-no, they shouldn't, but they do. I should have put a poll question about that as well, but maybe I'll do that after I'm done this podcast. But anyway, what that means is that they learned a strategy on YouTube or a book or, even our training course, something like that. Maybe they mess around with it for a little bit and then they jump right into the live trading because they can't wait. They got to get in the markets and start making this money. And although that is the fastest way to start trading, it is also the dumbest. So you win 2 prizes, the prize for fastest trader and the prize for dumbest trader, and probably the prize for most likely to fail at trading. Congrats to you, 3 gold medals. The reason this is so dumb is because 1, they don't actually know if the strategy is profitable. We sit back for a second and think about this, right? This is no different than making a blind bet, right? If you were to ask me, hey, Akil, place $20 on home team to beat away team. And I'm like, well, who's the home team and who's the away team? And what sport is it? And they're like, I don't know. Sure, whatever, right? It is the equivalent of that, right? It's really a bad idea to bet hard-earned money on something that we don't actually know has an edge, but we do it because we're all intrigued by gambling and the rush that comes with trading, and we have these weird concepts about us determining whether the market is right or not and our ability to do so and whatever. 2, right, aside from not knowing if it's profitable, which really should be the only one that matters, but 2, we have 0 confidence in it. Again, we think we have confidence in it because we saw it for a little bit, but we don't. It's very similar to, here goes Akil's relationship advice, right? Very similar to us like finding someone, asking them out on a date, and then like after the first week where we're still in that honeymoon phase, being like, hey man, she's the one. We're gonna get married. And we don't know anything about them, right? Everyone shows their best in the first 2 weeks of a relationship. And then after that, you find out the weird stuff and the stuff that makes you upset. And then you have a different perspective on things. I actually had a friend of mine like that who was dating a girl for like a month. And they're like, we're going to get married. And I was in that weird position where I was like, I don't want to be that guy to tell them that this is a bad idea, but that's also one of my best friends, so I feel that it's my right to tell them it's a bad idea. So I went ahead and told them it was a bad idea, and it pretty much ruined our friendship. Then they ended up getting divorced, so I was right. So it was bad on both ends. We both lost. So yeah, don't do that in trading. Now 3, going along with confidence, and I guess like the relationship analogy that we've been doing, is they don't have experience of both the highs and the lows. Just like a relationship, there are highs, there are lows, and once you work through them, you get a full idea of what that partner has to offer. Your trading strategy is the same way, right? There are high points where it's on fire, fuego, vamos, right? But then there are low points where it is complete crap. And it's like, come on, man. But the journey of seeing those high points and getting all emotionally excited and then going into a drawdown and being humbled, or going into a drawdown and getting all depressed and then seeing yourself seeing your strategy dig itself out of it and you getting excited, that's what builds your confidence in a trading strategy. And that is what's needed to stay with a trading strategy for the long term. So going back to the question, and I don't have any data on this, it's just a pure guess based on my experience in the market and the amount of traders I've worked with and spoken to over years. If I had to guess, I would say that the average trader probably abandons their strategy within 1 to 2 months. Now, I actually did end up asking our YouTube community this question as well, and I didn't have enough time to really get a lot of votes before recording this, but the votes that I did get, and what you see on the screen when I edit it may be different than what I'm reading right now, is that all the answers were perfectly split, except for one. 33% said most traders ditch their strategy in less than a week. Yeah. 33% said most of them ditch it in less than a month. Yeah. 33% said most of them ditch it anywhere between 1 month and 6 months. Yeah. Unfortunately, my answer that I'm about to give you now got 0 votes. And my answer is that I wouldn't ditch my strategy until a full calendar year. Anyway, my answer is different because professional traders are different, right? Professional traders have thoroughly tested their system, their strategy. We're talking hundreds, if not thousands of trades. We have the data that proves profitability. It proves that we have the edge, the positive expectancy. And more importantly, we have lived through both the good and the bad and the ugly periods of that trading strategy relationship. And because of that, we're not going to be so quick to abandon a strategy over a short-term rough patch. Now, personally, as I mentioned before, I would give a strategy a full year before ditching it, but during that year, there are some evaluation periods that I do that play a role in that. So I do evaluations of my trading business, right, every quarter, so every 3 months. And if the performance of a said strategy is below expectations after that first quarter, I make note of it. It's not a big deal, right? 3 months usually isn't really enough time to make a major decision, like I'm going to throw something away that I worked so hard on and has proven to be profitable over a very long period of time. Now, again, if you're day trading, it may be a little bit different because your frequency of trade is higher. So when I day traded, I would evaluate every month. So, your timeline is going to be a little bit shorter, but let's just take like intraday swing trading for this example. So 3 months, if it's going bad, I take note of it. I take note of what to monitor, and I make sure during that next 3 month period, I'm keeping an eye on that thing that isn't working the way it should be. Then by month 6, I reevaluate again and I check to see if anything changed, right? If performance is back to normal and all the funkiness is gone, great, let's get back to business. But if things are still going bad, now I start looking for possible adjustments. And by looking for possible adjustments, it could even be implementing possible adjustments if I was able to catch something during that first 6 month period. So for the next quarter, I make those adjustments. And if those adjustments still don't improve by the end of the year, then I know something drastic probably needs to be changed. And that would mean ditching the strategy. But again, just as it took me a full year to finally admit that I was a profitable trader because I didn't believe in it because I was so streaky before, I'm going to be patient with ditching a strategy as well. Now, with all that being said, and I'm pondering this right now, honestly speaking, I don't think I've ever completely ditched a strategy because of performance. Now, let me preface that by saying this. There was a good period of my trading timeline where I was really bad and I was doing dumb things and I was trading strategies without having tested them and all that type of stuff. I'm not counting that period, right? That's my amateur average trader phase. I'm talking about once I entered my professional trading phase, I don't think I've ever ditched a strategy. And again, I think there are a few reasons for that. One, if you've properly tested a strategy beforehand, you probably would have identified any issues with performance longevity before you ever started trading it live. We always teach our traders to test over different market conditions. So you're not just testing 1 year, because that could just be a great year and then you can start trading live and it's crap. Or it could be a bad year and every other year after that could be great, but now you've given up on a strategy that is really, 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 really good. You just picked the 1 year that it wasn't. So when we test over very large sample sizes. That way we can ensure that our strategy performs during years where the market is good for it and years when the market isn't so good for it. Secondly, if you are a skilled trader and not just a blind system follower, this is why you need to grow and develop the skill of trading, because it's not as simple as following a system and thinking it will act the same or perform the same for the rest of history. Trust me, it is not that simple. Market conditions change all the time and we must change too. But if you are a skilled trader, you should be able to identify why something isn't working and, more importantly, the adjustments that need to be made in order to get it working again. And just to clarify, when we're talking about ditching a strategy, I'm talking about ditching a strategy of a whole. I've absolutely stopped trading individual pairs before, individual assets. But as far as like a strategy as a whole, after that weird, bad phase of me doing dumb stuff, I can't think of one that I've actually ditched because of performance issues. I guess the closest would be the DKC, but that was kind of an experimental strategy to begin with. But I ditched it not because it wasn't profitable. It was actually very profitable. I ditched it just because I didn't feel like day trading, because the year before I told myself I was going to stop day trading, and then it pulled me right back in. It also had a very low win percentage, which was quite annoying as well. So maybe one strategy I ditched. Anyway, thank you guys for the questions, and I hope you enjoyed the answers. Hey, if you're looking to join me in a more interactive environment so you can ask these questions while I'm actually on the chart doing chart stuff, again, make sure you check out our live trading room. We have a London and a New York room. I recommend coming in both. Me and Jason have different styles of trading, so I think it's cool to see how two professional traders keep the same core principles but attack the markets in different ways. And again, you can ask all the questions that you want. So check it out, www.tier1trading.com. It is part of your risk-free trial membership, which means you can attend the rooms, you can watch the recordings, you can talk with the community, and you can take some training courses as well. If you're going to be on the platform, you might as well take full advantage of your 14 days on there, so do as much as you can. All right, that's it. Workshop, sign up. Until next time, plan to trade your plan. Take care.